I'm Sana Kadri. I'm the founder of EdWatch that reignited hope for a better future in the most uncertain times of our lives. This year, we emerged as a futuristic skills development platform where we focus on global emotional intelligence, data science and machine learning, risk and IT security, and IFRSs. Hello, Assalamu alaikum, and welcome to yet another episode of IFRS Practical Issues series by EdWatch. I'm Sana Kadri. I'm the founder and CEO of EdWatch, and also an expert and a trainer on IFRSs and financial storytelling techniques. The objective of IFRS Practical Issues series is basically to help the accountants and finance professionals within the profession, within the industry, who are faced with tremendous number of challenges every now and then, to be able to find out ways for accounting, find out solution to accounting and, IFRS implementation problems that they might come across every now and then. And we know that we have as a professional, you have a lot of challenges already at your hand. So this is a very small initiative. So if you have any query, any problem that you're stuck with, and you're looking for a consultant or an expert, you can always send in a query to us. We'll be sharing link to into our website page where you can always drop in your queries. And what else we'll be doing is that if the query, whatever problem you are facing is urgent, you can also send us an email to resolve it based on the priority at contact@ed-watch.org. So this was a brief introduction of what this is about. And first of all, before starting, I'd again like to thank you all for a tremendous response that we received last time in our first episode. Obviously, that was the first time we were doing. And the response was very good, and we received queries. We shared a link where you can again send your queries and problems that might be there, and you are trying to figure out the problems. But the response was very overwhelming, and I'd really like to thank you all, because I understand that it's a very specialized area, IFRS is. Not all accountants are familiar with it. Not everybody is interested in it. But we don't realize that, IFRS is what makes your financial statements. And financial statements are for the stakeholders. And it is really, really important as an accountant, as a finance professional, it is really important for you to ensure that these statements are transparent and consistent for the stakeholders, to present the right picture to them. And another very important aspect is that IFRS, we don't know, many people don't know, is that IFAC and ISB are always coming up with changes to the IFRS standards. Not changes, or you could say guidelines or improvements that could help us better present our financial statements in the light of the rapidly changing economic and financial circumstances. Everything that's happening around the world is obviously impacting your financial statements. So that was just a bit of an introduction. Thank you very much. And let's just head on to the next. So so today we'll be discussing, let's just, okay. So we received a large number of queries, and we have scheduled a couple of queries for this month sessions. We'll be having 2 sessions this month, wherein we'll be discussing the queries that we've received. So the first query that I'm sharing, obviously we're not disclosing the name of the company, but the name was shared, and we could have a chance to go to its website and understand more about its business. Initially, that was sent for a clarity and an understanding for revenue recording under IFRS 16. But let's just go through it and understand what actually has to be followed. So the case is that company ABC provides data center, cloud, and security solutions. It is based in Pakistan and is in the process of providing computer servers, hardwares, to its clients with the maintenance of the same period for a with the maintenance of the same for a period of 3 years. The company generally disposes of the asset after the 3 years of the contract. All the customers are foreign entities to whom the company raises an invoice, and the funds are received from abroad. The servers or assets are deployed in Pakistan based on the instruction of the foreign customer. The company has no relation to the local entities where the servers or assets are deployed. The company receives the payment against the 3 years contract upfront at the time of deploying the asset. The questions are how to record the revenue in the company's books of accounts. And the second question is how to treat the assets in the company's books of accounts. So now let's just look at the query and try to understand where it is coming from. To understand, we should know, to understand how to account for the revenue and everything, we should first know what is the business of the company. So as I mentioned that we had the chance to go through the website and understand the business. The company provides basically servers and storage to its clients. The servers and storage could be cloud-based, it could be hardware servers, and other software solutions which are mostly around data security. So this is basically the main business of the company. So the company is in the business of renting software and servers, and it is not a leasing company. It's not a financial institution, not a leasing company, not a banking institution, any other financing company. So what do we understand from this is that the company this is the regular business of the company, and the company being renting its services or its servers is not doing this as one-off a transaction. So this is not going to be covered under IFRS 16 because it is not a financial institution. It is not covering it as one of a transaction. So how to record the revenue? The revenue has to be recorded under IFRS 15. So let's look at the IFRS 15 model. IFRS 15 basically defines a 5-step model. The 5-step model is, of course, first is to identify the contract with a customer. The second stage is to identify the performance obligations within the contract. The third step is to determine the transaction price. The fourth step is to allocate the transaction price to the performance obligation. And the fifth step is to basically recognize. So this is a 5-step model. Now, looking at the contract, we could see that the company is entering into a 3 years contract with the customers. So there are basically two possibilities. In a 3 years contract, there could be two possibilities. One is that the company takes an advance rent or advance revenue fee. Maybe it could be in 3 years, or it could take 1 year advance every year fee for the services of the 3 years. So this could be one possibility. The second possibility, which is in many cases could be the contract identifies milestones. And obviously, based on those milestones, the company is charging revenue and the company asks for the payment. So if a certain milestone is completed, the company would send in an invoice and the client would make a payment within the defined time. So these are basically the two possibilities. However, so let's just think over how to record a revenue in each of these possibilities. The first possibility, as we discussed, is when the company is, taking an advance revenue, taking an advance fee for the 3 years or 1 year, which is generally the case. It could be 1 year or quarterly advance payment. So in that possibility, obviously the consideration is to be given on the terms, terms of services, the services and the terms agreed within the agreement, within the contract with the client. So the contract will determine the performance obligations based on what services the company is giving, and over the 3 years time. That you have to do, that is going to be the first step. Determining what and when to record. Identify the performance obligations and then record the revenue. So what you will be doing is, if you are the company is charging a year's advance revenue. So say it's a 3 million fee, $1 million received every year in that advance. So you will record an unearned revenue as a liability, and obviously then record revenue based on the performance obligation throughout the year. This is the first possibility, and this is how we will resolve, we will record in the first possibility. The second possibility is when the milestones are there. So it's a very tricky concept of milestones, because generally companies would say, okay, so the milestones in my contract are the performance obligations. And because these are defining my terms of service, and because so when my milestone is achieved, I will record the revenue. So the point to consider here is that not all milestones could be performance obligations. So what I would, for example, I would quote an example. Say if there are 3 milestones in an agreement. The first milestone is customizing the software and server for the client. The second milestone is installation of that software in a third-party premises or in a premises. And the second milestone is installation of the server, and the third milestone is obviously maintenance on an annual basis. So if you look at the first and second milestone, especially the second milestone, installation is for the entire 3 period. The installation transaction, the price or the revenue that you would receive for installation is not merely dependent on one instance. It has to be maintained throughout the 3 years time period. So in that factor, again, it is subjective. It again depends on the terms of the agreement, contract, how different services are defined, where lies the responsibility of what responsibility is defined, what is defined as the responsibility of the vendor, the company in the agreement. That is subjective. But as I mentioned in this example, it's not necessary that the installation is your performance obligation. It might be, maybe the contract relieves you of the rest of the responsibilities for the next 2 years. But again, it has to be, the point is a milestone not necessarily may be a performance obligation as defined under IFRS 15. So these are the two possibilities that I wanted to discuss. And so let's just look at the accounting entries. So basically, the accounting entry would be, again, under IFRS 15, what you could do is when you receive a cash, you debit the bank account and credit liability, unearned income. And when you have, identify the performance obligation and the performance obligation is met, you just record the revenue, recognize the revenue and against the unearned income. So there is another very important concept that needs to be looked into. I will not go into much detail about that concept. There's this concept of principal versus agent consideration. So basically, while you are recording in a revenue contract, you have to be able to identify whether you are acting as a principal or as an agent. So basic definition, a basic difference between the two is that of a control. That when and at what point in time, and how much do you control, whether you control the goods or service that you are selling or not. So this is a very, very important concept. It is IFRS 15 basically gives guidelines on how to identify, how to determine control in a transaction, in a sales transaction. And although those guidelines are not exhaustive, many things are subjective and you have to consider. But it provides a very, you could say, comprehensive guidelines on what constitutes control in a transaction or not, and what makes you a principal or an agent. So it's simply to explain it, a principal is when you are in control of the goods and services, and an agent is when you are doing it on behalf of another person. So the timing of control determines how we should record it. And the impact of recording of that principal versus agent consideration is that in a principal, when you are the principal in a service, you record gross revenue. And when you are an agent in a revenue contract, you record the net revenue. We'll understand it in a much better detail if we look at the case study again. So basically, ABC, here it says that the servers are deployed based on the instruction of the foreign customer. All right. And the company has no relation to the local entities where the servers or assets are deployed. Means the premises are either defined by the customer. And one must look into, one must consider whether the contract covers, installation and deployment of the servers. And it does have a transaction fee related to it. So if it is acting as an agent for that premises, the transaction cost related to the premises charges, in that case, or in that transaction, in that part of the transaction, the company might be acting as an agent. So again, we're discussing these things on a broader level to understand all the aspects of the transaction. We don't know what the contract says about it. We don't know how the transaction works, how the whole transaction, whole sales or service maintenance contract works. But these are the areas that need to be considered. These are the factors that play an important role in determining determining the revenue and how it has to be recognized. The second question that is asked is how to treat the assets in the company's books of accounts. So it's very simple. It is very simple, because if the hardware or any assets that the company holds, since the company is recording it under IFRS 15, the revenue. If it owns the assets, it will be, it will keep it in the books of, in its own books, and based on whatever the life it assesses, it will be depreciating the assets. And if the assets are acquired under a lease, so it will be recorded under IFRS 16. So this is the whole concept of the whole query, and how we have assessed it, and how we could record the transaction under the query that was sent to us. I hope that I have covered it in much detail and tried to resolve the issues of whoever sent the query. Although a clarity comes with the contracts in hand, and what are the business point of view behind recording this transaction, what are the business considerations behind it. So this was about the query. I will not be sharing an update today, but I will though be taking you through one concept. And that's a very, very important concept. So as part of our trainings, we do cover IFRS updates, uh, implications, impacts, and everything related to financial reporting in a much detail in our training programs, which could be self-paced, live, or in person. Uh, and this particular concept that I'm right now, aspect that I'm discussing right now, is also covered in detail in our other training programs. So you can, join us for those programs if you want to look into detail. But the reason that I wanted to cover this thing is because I have, in my in-person and online trainings, I have come across various people who have discussed these things, and it seems like they don't have clarity on what to do and how to do this thing. So the question is how to account for a SaaS arrangement. So SaaS is basically software as a service. And I brought this point because we've just discussed a software and server um, a case study. So basically, if we talk about ERP, we know that traditionally we've been recording it as an asset. The cost of ERP has always been capitalized, for the reason that ERP meant some hardware and so much changes, implementation costs and impacts going on within the company. But as we talk about software as a service, there are, for the past, I would say, 5-10 years, the concept of ERP has evolved. Now we don't need hardware. It's all software. It's a SaaS arrangement. So IFAC and ISB a few years ago, I would say more than a couple of years ago, came up with a detailed guideline on how the SaaS arrangement has to be recorded. And so because not a lot of people have the understanding of how it has to be recorded, how it should be treated, what are the aspects that they need to look into, most of them are capitalizing a large amount of cost incurred on ERP implementation. It might not seem an issue right now, but 6 months down the line, 1 year down the line, when you are getting your financials audited, or when your auditor is being, reviewed globally by its, global body or its local body, there might be consequences of recording huge costs as asset. So it's the concept is, the question is whether it should be recorded as an intangible asset, or it should be recorded as a lease arrangement, or it should be just expensed out. There are a lot of things to be understood conceptually. Conceptual clarity is very important. And I would want each one of you if whoever is implementing ERP and whoever is thinking of implementing an ERP, just need to dig deep into what the guidelines are about. And then IFAC has again come up with just a few months ago, I think a year ago, with another guideline on customization and configuration costs of a SaaS arrangement. So these are detailed guidelines, and these need to be understood. And again, it varies from contract to contract. So this concept again needs clarity, so that future implications are contained, and there are not huge consequences. So this is it. This is what I wanted to discuss with you all today. I'll just go through. I'll just let you know one more thing, and that's we are planning on another episode on January 26th, which is going to be covering IS 21. And we'll be sharing some updates. There are some new updates on IS 12. Those we'll be also looking at. IS 21 is specifically important because of rapidly fluctuating exchange rates that we're experiencing these days. And yes, IS 12 update is also very important. So if you have any query, what you can do is that you can send in your query, and the form we'll be sharing a link to in our comments. Let me just put in the link to the. So whenever you have time, and if you have any query, you can send in your query, share your query over here. And this is our IFRS practical issues page where we update, where we share whatever episodes we're coming up with, and you can share your query, and we can try to answer your query. And another important aspect is that if this is one thing that I wanted to make sure is that if your query is very urgent, also send us an email at contact@ed-watch.org so that your query is responded in time, because we receive a large number of queries, and we try to schedule one session a month so that your queries don't go unanswered. And do keep in contact if there's any a standard that might be of interest to you. You would be able to get a view on how to deal with certain problems or certain practical issues in that standard. Thank you very much for joining us. Looking forward to see you again, and have a good day.